Oh.
And welcome. We are live here on the YouTube. Want to welcome everybody out. We're going to have a fun little live webinar tonight. We're going to be talking about quite a few things. We're going to be talking about bearish retracements. We're going to be talking about, investing and really what to do in these kinds of market conditions. And I got a couple folks here with me that I think I'd like to introduce while we're waiting for everybody to kind of trickle on in here. Hey, Emily, how you doing there tonight?
What's up? No, I'm doing wonderful. How are you?
Oh, I am fantastic. Absolutely fantastic. Just thrilled to be here with you.
Yes, and glad to be here with you tonight.
Are you all hunkered down?
I am. We are officially shut down. Like we're just indoors now.
It's no longer a suggestion.
No, starting Monday we were told stay home.
Well, I'm pretty good at that. Being a trader and getting to sit at home and work from home for a long time now. This is not really new to me.
Yeah.
But it's a lot of fun. I think this is kind of an interesting situation. We've had a lot of people out there looking for help, asking a lot of questions. And just really looking for information and how to approach these markets, because we're in very, very, very interesting times. And as we kind of get into this here tonight, we get started. Got a handful of things that I wanted to talk about tonight, and just some ideas for everybody. Kind of make sure that we have a good idea of how to go about handling this. Looks like we got some good folks trickling in here. Shout out to Dan. Glad to have you here, Dan. Tavo, hola mi amigo, un abrazo fuerte. And we've got, I'd like to see everybody else in here. So everybody chime in and say hello so I can get an idea of who's out there with us. And really a warm welcome to everybody. And hopefully we got some new folks here. I recognize John. Hello. Dennis, how you doing?
Yep.
And I'm sure a lot of you are tackle regulars. And hopefully we've got some new folks here. Go ahead and share the link, give it a like, give it a share, and kind of get the word out that we're doing this live thing, because this is kind of a new time spot for us. We're doing this. Hey, from Spanish Fort, Chris G, we're practically neighbors, right? So, hey, Joe, got a good group here, good group. So again, and I want to congratulate y'all for being here. It just tells me a lot about you that you're here. And I know a lot of you, again, tackle regulars, are really committed to your education, to doing the stuff right and getting it right. And you're taking every opportunity you can to gain new knowledge and information. It's really an honor and a privilege for us to share it with you. Hey, Ed, greetings from Miami. I understand Florida just went on lockdown today too. So good stuff. Glad to have everybody out here. So I have a pretty simple agenda for us tonight that I wanted to talk about here. And some of the things we're going to do, we're going to talk about the difference between a mindset between investors and traders, and how an investor is going to think about this marketplace versus how a trader is going to think about this marketplace. And then we're going to really dial in and focus on the opportunities that are there for us. There are investment opportunities out there. I don't think we're quite at the bottom yet. I think there's going to be more down market, and there's going to be opportunities for us right now that we can take advantage of. And if we can learn to capitalize on that. And in these uncertain times, I think a lot of people are thinking more and more about where their money comes from, where their money is, how they're protecting their money, what they're doing with their money. And again, a lot of good folks have questions. So this is a concept that I think super important, that is one of my favorite quotes by Warren Buffett. And it's really a very powerful quote. Be fearful when others are greedy, but be greedy when others are fearful. Now, this little bit of advice here is the kind of advice that, when actually followed and applied, intelligently, when you have the right education and information with that, it can make a huge difference for people. Because there are a lot of folks out there that are scared for their money right now, and they're feeling quite fearful. But in the meantime, we've got a well-trained army full of tackle traders out there who are looking for opportunities to make money in this volatile market, make money to the bear side. And these emotions that drive the market, fear and greed, they're really quite comprehensive. They're very, very interesting because, right now there's people that are afraid and fearful of losing, but there's also people who are afraid and fearful of missing out on the opportunities, right? Now, I know that's true for me as I'm looking at the markets and I'm seeing opportunities and I don't want to miss them. And I have to really keep myself in check because that FOMO is huge, right? I mean, isn't it for you, Emily?
Oh yeah, absolutely. It is huge. The fear of missing out is something that, we all have to fight every single day when we're traders, right?
Yeah. And so I want to speak to everybody's brains out there, kind of like, the investor side of your brain and then the trader side of your brain. And I think a lot of people are wondering, how much more this market has to the downside. I think a lot of people are wondering, what to do with their retirement accounts. I think they're wondering about what stocks to invest in when the dust settles, like where to put money when the dust settles. There's going to be a huge opportunity there for us. Mm-hmm. But then there's that trader part of your brain, which wants instant gratification. It wants that money right now. Mm-hmm. It wants to take advantage of the fear in the market, and bears are very greedy animals. Try feeding a bear one chip out of the bag of potato chips and see how that goes. They're going to want the whole bag, right? Absolutely. Absolutely. So there's fear in the market and there's going to be opportunities to the downside. We're going to look at a pattern that's showing up itself right now that will give us an opportunity, and again, an opportunity to take action right now and to take advantage of that fear and to be a little bit greedy with some controlled risk. And to take advantage of what I think we're going to see is a little bit more downside in the market here. So, and again, anybody who tells you that they know what's coming down the pipeline, first of all, I want to speak to that. Nobody knows what's coming down the pipeline. This is a very unique situation we're in right now, and I don't think anybody's really seen this. We don't really know, first of all, we don't even know when we're going to be out of this, self-isolation quarantining stuff. We don't know when they're going to, give us the green light to go back to business. We're deciding right now what businesses are essential and what businesses are non-essential, right? So there's a lot of questions people have. But there's going to be a lot of really good answers for us here that I think are going to be helpful. And if we can learn this concept, if we can learn to be fearful when others are greedy, and again, greedy when others are fearful, there's going to be huge opportunities for us. Now, the one thing I really wanted to spend a little bit of time just kind of talking about before we really dive into our primary topic here of the bearish retracement, I wanted to talk to that mindset, the difference in between an investor mindset and a trader mindset. And we could just kind of do the old kind of, create a little, graph here where we talk about we'll do the investor here on the left, we'll do investor, and then over here we'll do the trader. I'm going to learn to spell one of these days. And investors right now are probably wondering where the bottom is. And maybe first of all, they're probably most worried about how to protect. And if you can learn how to protect your assets first, that's probably the first thing you need to make sure you know how to do. And that's something that we do at Tackle Trading. In fact, I know a lot of people out there in Tackle Trading land that are here tonight. How many of you feel like you've been able to protect your portfolio? You might have taken a haircut like a lot of us did with the markets, sell off as steep as it did. But how many of you feel like you were better able to protect your portfolio and to maybe move money to the sidelines because of the education you've got? So if that's you, go ahead and type in the chat there, type in protect. Because I know a lot of you have been getting a lot of positive feedback from tackle traders out there, just telling us that they've been able to protect themselves. And then I think the other question in everybody's mind is where's the bottom? Big question in everybody's mind is where is the bottom? And that's a question. And if we were to take a poll out there, how many of you think we are at the bottom yet? And so if you think that this is the bottom, I want you to type in bottom. But if you don't think that this is the bottom, I want you to type in not yet. So either bottom if you think that this is the bottom and the investor opportunities here, or not yet if you don't think that this is the bottom. And again, I already see some not yet said. Yep. Dan, not yet. Yep. And Pearl's not yet. Blake, not yet. I think we all can agree that we don't know yet. And I don't think we've seen the bottom yet. But how many of you also agree that there's going to be a huge opportunity when that bottom does show up? And we don't need to predict it. We simply need to be able to spot it. Yep, absolutely. So we're going to learn that. And then once we find that bottom, people are going to want to know how to value invest. Again, value invest and pick the right stocks and have a good grasp of fundamental analysis. And, what stocks will be, ripe for picking up at cheap prices. Fundamental, I ran out of space there, but fundamentals. And then, one of the things I think other people were thinking about is how to cost base, how to average their cost base. And, look for stocks that, have, cost base, maybe stocks that pay dividends. There's going to be some really good, hopefully dividend payers. How do you spell dividend? D-E-N-D? Who knows? I can't spell. If you can only spell a word one way, you lack imagination. Dividends. And then I think one of the big things that traders might or investors might not have thought of yet or are not necessarily aware of, and I know tackle traders are, is they want to know what their options are. And I use that word very specifically because if you understand how to use options, when you can find the good value investing stocks, we can find those fundamentally sound stocks. You learn how to worry about your cost base and your average cost base. You can start to lower your cost base if you know options. If you can learn how to do things like covered calls, and things like naked puts or cash secured puts. And if you don't know what those things are yet, that's okay. That's one of the things we can help you learn. And those are ways for people, once they pick up those good stocks for cheap, I'm going to show you some of the ideas that we've been putting out there, that when the time comes, when that bottom shows up, the investors are going to be covered. We're going to be able to help them with that information. And again, make sure that, being in the right place at the right time, you don't have to be afraid of missing out on it. Now, I want to speak to the trader part of your brain. And we're going to go to the trader part of your brain and talk about that. And these are the things I'm thinking about as a trader. And whether you're a beginner, brand new to this stuff, or you've got some experience and expertise in this, or you're building on that, it doesn't really matter because, people want to know these things from wherever they are. Whether you're a beginner, you want to learn how to do easy stuff, or you're more, a little bit more advanced and learning on being more sophisticated and savvy with your trading. You might want to be like a Gino Poor one day. There's a lot of good things you can learn. This is where I think things like technical analysis is going to come in very, very handy. And technical analysis is very important skill set that traders want to learn. There we go. And it's a very, very powerful skill set. And we're going to be talking about one specific pattern tonight that can help you make money. And, this is where pattern recognition can come in, patterns. And traders always want to know about patterns that are helpful. And we're going to show you some really powerful ones tonight. And then how do you make money in a downward market? People have heard about that. And I know some of you already know this, and I know a lot of you might not know this stuff yet. But how do you make money? How do you cash in and make money in the bear market? And some of the skills you want to learn, of course, are things like selling short. Now, when I was brand new to trading, Emily, the idea of selling short was completely foreign to me. And it was like, it melted my brain the first time I heard it.
It did for me too. I could not grasp it at all.
Well, yeah. And so, it took me a while to wrap my head around that concept. And again, that was 20 some odd years ago. But, the first time I heard about short selling, I was like, wait, what? So how do I sell a stock first? And anytime you find a good bearish opportunity, you can borrow stock and sell it high. And the name of the game is to sell high. And that's relatively simple. You just sell high first, and then you learn to buy low. And it's, buy low. And you just reverse the order of operation, what you do from when you're bullish. When you're bullish, you try to buy low, sell high, and make your money that way. When you're learning to sell short, you learn how to borrow stock, sell high. And then if the prices drop, like you suspect they will, you can buy low and you can put money in your pocket that way, selling short. The other thing I think people will want to be interested or are going to be interested in learning about, and we're going to be talking about tonight and showing you where you can learn more about it, is how to buy puts. And that's gives you the right to sell stock and or speculate. And that's, again, options. Options are huge. for traders when they have lots of, options are just contracts that give us choices and different ways to control risk and make money. So buying puts is one thing that's going to be a valuable skill set. You can use it to protect your stock. You can use it to speculate on stuff you think is going to go down. And then I want to tease y'all with an idea that if, I know a lot of you out there, the tackle traders that have been working on this stuff, you probably love the tackle trading playbook. And that playbook is super valuable because that playbook is going to give you ideas on how best to approach the bear market. Like Tim did a scouting report this last weekend with the options report where he talked a lot about how, what kinds of spreads to use, debit spreads and credit spreads, and how to do things, to use options to control risk and create opportunities to make money in the downside. And if we can do these things tonight, and again, we're not going to spend too much time talking about the investor stuff. I'll give you a couple of ideas that'll be worth showing up for tonight. And then we'll go in and we'll talk about the trading stuff. We're going to learn about some of the patterns and just show you a little bit about how the playbook works and give you some ideas on how to make money on the downside. Because I think there's two huge opportunities right here in front of us, Emily. We have an opportunity down the road to make money as investors. To buy good assets on a deep discount. And I don't think we're at the bottom yet. And whether that's a month from now, 2 months from now, 6 months from now, nobody knows. We don't have to predict the bottom, but we do want to know how to spot it. And then there's that opportunity in front of us right now. Like right now, we have this huge opportunity in front of us. I think the timing in the market is quite good. We got some information coming out this weekend that's been a little bit more negative. Market sentiment seems to be a little bit more bearish, and there's a pattern in the market that's showing up right now that makes me want to become a full blown bear this week and just take advantage of some of the downward volatility I think that we're seeing the market show us. So we're going to get him. We're going to show you that playbook, and then we're going to come up with a couple of reasonably good trading ideas. And then for those of you who are with us already, tackle members, you already know how awesome tackle trading is, and all the value we offer. But for those of you who are new to tackle trading and you're not pro members yet, we're going to just give you a real simple offer at the end of this webinar, which is just our standing offer of a 15-day free trial. And I'm going to point you to some ideas that can help you get started for the newbies, and just let you try it out and start learning, because there's a huge opportunity right now. Again, you want to make sure you can be learning this stuff and taking advantage of it, because I have never in the history of my life that I can think of has everybody been on lockdown and wasting all their time watching Tiger King on Netflix. And if you've already finished Tiger King and you're looking for something new to stream, well, maybe you could stream, the Technical Analysis 101 course, or the Options 101 course that all tackle members get, and just get yourself better educated so you can take advantage of this stuff.
I think there should be a rule, like for every movie or show that everybody watches, like the following cue should not be another movie. It should be
you got
educational. You got to balance it out, right? We can't just be on the couch entertained all day long. We have to get some education or something,
So Chris, for every one episode of Ozark you watch, you have to go watch one module of Options 101 or Technical Analysis 101. Make the money to pay for the membership. Exactly, that's it. So
I will confess to Chris though, I couldn't sleep one of these nights, and I watched the whole season 3 of Ozark in like one sitting. So I'm going full disclosure. I did do that, but it was a night that I couldn't sleep and the markets were closed, so I couldn't trade. So I just decided to watch the whole season of Ozark. So guilty there. Well,
and I'm also very, very curious to know where Carol Baskin's husband is. I must know. But I think that with the market where we're at right now, you've all seen the market put in this, this market was very, very bullish for many, many years, put in a top and just really steep sell-off. We've seen this really steep sell-off, and the market's rallied back up. And we're going to be talking about this bearish retracement pattern. When markets go bearish, the pattern is they make lower lows and lower highs and lower lows and lower highs. And when you see this little pattern right here with the market, after it's ripped down and then rallies back up a little bit, it's what they call a bull trap. It moves up just enough to get the bullish people thinking it's going to be, this is a bottom. And I've heard lots of people out there, lots of pundits on TV and experts here and there saying, this is it, this is the bottom, we're in. And I'm thinking to myself, we don't have enough information to call that yet. Like, there's no way to know that. And it's possible, I might be wrong, but I'm willing to miss out on a V-shaped recovery because I think we have more downside as more information comes out. As we're seeing, the unique situation we're in really kind of rear its ugly head, and it's scaring folks. So there's going to be that opportunity to feel safe and to do that the right way. So that's kind of the big picture idea. Now, what I want to do here is, and before we get in and show you the pattern, I'm going to bring up a little tackle trading website, just for all of you who are familiar with this and know us, tackletrading.com. And, if I could have maybe you put in the URL address there in the chat for me, Emily, that would be awesome.
I sure can.
Okay. And, this is Tackle Trading's website. If you're brand new to us, if you scroll down to the bottom of the home page, we've got a little 15-day free trial that you can take advantage of. If you want to get in there and start, making sure you're taking control of your money, you can do that. But I wanted to show you some of the features. Oh, hey, look at that good-looking guy right there. He's pretty cool. And then you got, Coach Gino, Coach Tim, Coach Matt, and all of our other coaches like you, Coach Emily, that are awesome contributors and participants in what we're doing here with our awesome community. Some of the things that I wanted to point out to you tonight are for those who are already, tackle folks, they already know about how awesome the scouting reports are. They already know about the stock report, the options report, the commodities report. Now that we put out those weekly reports with candidates, ideas, watch lists for you to take advantage of. But for the newbies, I wanted to point out a couple of other things that I think are really worth noting is we have courses. And if you're brand new, we have a 7-step guide to trading, and we have really awesome courses that are included in the free trial and tackle membership. The technical analysis 101, where you're going to learn the pattern I'm going to show you tonight. Options 101, where you learn options basics. And then you have the rest of the 101s, futures and Forex and system development 101. And then we have some premium stuff that you can take advantage of. We got a bear market survival guide that we offer, for a premium price. And then we've got cash flow, condor, step system, tackle trading. They're just, really phenomenal. And I know a lot of you have already done those, but really tonight we just wanted to get, everybody kind of pointed in the right direction. And for everybody who's new and they sign up for the 15-day trial, they're going to get a handheld, a one-on-one meeting with one of our coaches, most likely Frank, who's going to help you out, walk you, through this website, show you where to go. And he's going to show you how to get in and take, like the technical analysis 101 course and the options 101 course. You're going to learn in depth some of the stuff I'm going to show you tonight. And then we also have, things like our clubhouse that are, tremendous value and things of that nature. I'm going to jump into the reports, and I'm going to show you the most recent stock report. I already happen to have it open here. And just some of the ideas that we have out. So this is a report I did, and Tim also did an awesome options report. And we have our Forex and commodities report. And I wanted to show you some of the ideas. You got the weekly write-up. You got the little video you watch that shows you everything. And there's a couple of bullish ideas that we put out this week that, and this is what we've been calling our coronavirus watch list. Companies that have been benefiting from and or bullish because of the current market conditions and some possible investment ideas. And I thought a couple that we put out this week that really panned out well were like DocuSign. We put this out. This has been on the list for 2 weeks now. And this stock has just been ripping up through the roof. This is DocuSign again, electronic documents. A lot of people working from home these days. We've also had companies like Zoom on the list, which we're on right now. We're using Zoom, and that's been ripping up through the roof. A little bit of sell-off today, but Zoom Technologies has been ripping through the roof. And we've had companies on the watch list like Slack that's showing breakout potential. And one that I threw on the watch list this week, which was NET. This is Cloudflare. It's performing and breaking out, posting new highs recently. And when you've got a bear market going on, and then you can find a handful of stocks, there's a very small list, and this is actually a pretty good size list, but it's, compared to the 4,000 some odd publicly traded stocks that have options on them, we've got this list of probably 30 some odd stocks that we think have good potential outlook at the moment right now. So there's some opportunities out there. The other list I wanted to point out here for the investor mindset is we've got a couple of here that I threw together, which is just companies that pay good dividends that are getting deep discounted right now because of the market bearishness. A couple of ideas like Coca-Cola, AT&T, Verizon, Kraft Heinz, ExxonMobil that just pay monster dividends, and their stock prices are getting cheaper and cheaper. And for those who are looking for information on how to pick up companies that pay dividends and to get a lower cost base. We've got pretty awesome stuff there for you. And then tonight I wanted to focus on this beautiful, sexy list right here, the sell the rip watch list, and talk about the bearish retracement pattern and a couple of them that look really, really good right now. Kind of one of those things that makes me lick my chops. And I don't know about you, Emily, when I see a good looking pattern on a chart, I have this Pavlovian response.
Yeah.
I mean, literally, too. You might as well just hear the bell in my head, like ding,
ding.
And I think I start salivating a little bit, and I get lit. I make funny little sound, like and I'm gonna get excited about that every time I see a good pattern. And when I see a pattern like AVGO on the list, this is Broadcom, ripping down, it rallies up, runs out of gas, starts rolling over, and we start seeing it sell. And I'm going to show you the details in the pattern and how to spot it. That stuff gets me excited. Or I see good looking patterns on stocks like Chipotle Mexican Grill. And, some of these are not difficult to think about. Like you could probably say, hey, if I were to say pick a stock up or down and let you guys tell me which way you thought it was going recently over the last month, I could throw out companies like, McDonald's, Starbucks, Wendy's, GM. Which way do you think these stocks have all been going? Down, right? So not hard to pick that. And there's a couple patterns on here that I think really look good. Like Chipotle looks really good at the moment. Darden Restaurants, DRI, which is on this list, has a pretty good look to it as well. Been running. It's already confirmed down. And, a lot of you are probably already in these trades. So you got that. What else did I see that looked really, really pretty tonight? Hilton Hotels, or Hyatt Hotels, excuse me. Hyatt's just starting to break back down after a big rundown. And I'm going to get in. I want to show you the pattern, and then we'll come back. And I'm going to switch gears and jump over into my little virtual account over here at Thinkorswim and pop open some of these patterns and show you what we liked about it. So the first one we popped up was AVGO, Broadcom. And Broadcom, the pattern here that I see, and we're going to teach you some of the subtle nuances that you see in the pattern, is it's got to have this big bearish pattern. You want to see the market breaking down. And here let me get my little drawing tool out and get my little pen marker out here. And the first thing we're looking for is this pattern of lower low, lower high, lower low, and the price is running back up at the moment. And we're going to look for catalysts, technical catalysts, like old support resistance zones or moving averages and things that people look for selling opportunities. And we're going to look for these to start to drop again and to make money on that downward, as soon as we get that confirmation signal. And I'm going to show you a couple of little tricks and techniques that I've learned over the years to read in the chart and to read the body language of the market so you can spot these opportunities coming. Now, Emily, you've been trading for how long now?
It's been about 5 years, believe it or not. And you are actually, obviously you know this, but you are my first technical analysis instructor. So I learned all these, reading the charts and signals and patterns from you. And, like you said earlier, it's the first thing a trader needs to do is be able to to understand technical analysis. And I still remember your little anecdotes and like your little Noah-isms of like, the cup and handle and the head and shoulder and the little pig let me in. It's kind of stuff. It's kind of funny, but it sticks in your brain when you start to recognize these patterns. So that's the first thing that a trader should start to do, is learn how to recognize these patterns. Well,
and I put a lot of that into the Technical Analysis 101 course, where we talk about just some of the rudiments of technical analysis and reading the charts. Price is king. Everything that's known or possibly knowable gets priced into the stock chart in real time, because we have information these days flying at the speed of Twitter and breaking news alerts, and everybody's carrying little devices with them at all times that give them that information instantly, and people can act upon it instantly. So I agree with you, Ed. Technical analysis is king. And when you learn to spot the pattern, if you can spot the pattern, it tells me that you have the potential to be good at this when you get the right education. And again, your education has to come before application. But if you can spot these patterns as I show them to you, and you can kind of get the gist of what we're talking about. And again, if you're brand new, for those of you who have experience, you've already learned some of these patterns. You've learned how to read the charts. But for those of you who are brand new, You'll be amazed at how quick and easy it is to learn technical analysis when you have a good experienced teacher to show you the ropes. So we're looking at a candlestick chart right now of AVGO. We're on a daily time frame. And the stock price, again, it ripped down as everybody was panicking and fear settled in. And then as news and anticipation of the government bailout came in, and I think we changed we're not calling it a bailout anymore. We're calling it life support. The government life support, that they're little life preserver they're throwing out there for us. The market started to rally back up. And at first it started to rally with some big green candles, and it rallied up for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. And it started to slow down. And I wanted to bring in a little history here and point out that the stock price came right back up into an old floor. And old price floors, those are thresholds. That was a price threshold that can act as a ceiling. So old ceilings act as new price, floors, and old price floors can act as new price ceilings. And as price support zones break, that becomes this price point where people look and they start to expect that the price is going to come up into that same zip code and zone and start to drop. And they'll look for these things like this moving average coming down right here. Like that's a selling zone where people will, it's a buying zone on the upside, but it's a selling zone on the downside. And there's a couple of little subtle nuances in here in this pattern that I think make it really easy to spot the potential downward, the downward potential here. The first thing I notice is that as the candlesticks are rising, the candles started to get smaller up here at the top and they shrink down. Now, Emily, what would that tell you when you see big candles down here at the bottom as it's starting to run up, and then you see smaller candles out here as it gets into that selling zone?
Well, it's telling us that the momentum to the upside is kind of slowing down and there's a little bit of indecision.
Yep, absolutely. So, it's clearly you've been well trained. And then this little candlestick pattern right here, let me zoom in on that one and really highlight it here. This little candlestick pattern right here, what would you call that one, Emily? The red one with the long upper shadow.
The hammer, the doji, yeah.
Yep. So kind of an inverted upside down hammer, long upper shadow. And that upper shadow tells us that there's been a shift between demand to some supply. Prices popped up, they started coming back down, and now it's starting to break down below these previous candles, and that's forming a resistance pivot. And there's an opportunity here where if we get, I think probably one more candle down, this is something you could take action on. And again, you could borrow the shares of the stock and sell short. And the idea here is, well, look, this stock just recently traded as low as 155, and it's rallied up here to 223 at the moment. It closed at 223. And I think we're going to see it roll over and head back down. And there's a couple other clues that clue us into that I'll point out here in a moment. But what if you could borrow the stock and sell it out here at, call it 215, and then buy it back as it gets down to the support zone near 160? If you could sell at 215 and pick it up at 160, what's that? How many points is that? Is that 55 points? Am I in the right ballpark?
Yeah, you're close enough.
I'm close enough math this late in the day. 55. I'll take Jeremy's word for it. Okay. 55 points. Well, if you know how to control the risk, how to put in an entry price, how to put in a stop loss, how to position size appropriately, 55 points, that could be some fat cash, and that's an interesting opportunity. Another part of the technicals I want to point out here that I find consistent with this pattern is the volume. And as people were panicking and prices were selling, you'll notice that the volume, the measure of people, participation in transactions occurring, a lot of transactions are occurring as prices were dropping. But as prices started to rally and run back up, what do you notice about the transaction levels and the participation level?
Not that much action.
It's dropping back down, right? So this is kind of the textbook pattern you're looking for. You're looking for the price to come run down and do this kind of check mark back up. And you want to see heavy volume during the dropping phase, but that it tapers off as it runs up. And then when those candles shrink out there and you get up into a catalyst like that support resistance zone and the moving averages, and you start to see the selling signals come in, that can set you up where you have an opportunity here to probably sell, put a stop loss here, above here, like our step method suggests, we've got the whole step system. And the potential For the candlesticks to maybe continue, maybe there's, outcome unknown. Excuse me. I got a little frog in my throat. There we go. And maybe we see a couple of candles drop for a few days, and it may not get all the way back down to that support zone, but it allows us to take small calculated risks. And I'll call it, if you use that as your entry and your stop loss, you could have a little bit of risk compared to a whole lot of potential reward. And what we're looking for is these, what we would call, 2 times the reward compared to about, 1 times the risk. So one unit of risk for 2 units of reward. That's a pretty, common way that we like to look at that. Now that's just one pattern. And to really help you guys see the pattern, we're going to look at a few candidates. So I had also mentioned Chipotle Mexican Grill, and we had a good time talking about this in a halftime report yesterday. Yeah. So same pattern here. Stock price is breaking down. It's selling. You can see the prices rally up for a few days. You can see how the candles get smaller and they shrink out here. You can see the exact same volume pattern here. The volume was really high on the run down. And then as prices have been running back up, you see them running back up. That's not a very good color. Let's try that one. Running back up, you see the volume dropping back down. You can see that tapering off. And you get a couple of candlesticks out here. Let's see how many selling signals we can spot here, Emily. I see a hangman candlestick. I see a doji, a lower high, and today's little spinning top is it's sitting on this $600 support zone. Now, I'll give you all a little memory hook that's worth $1 million if you pay attention to it. Everybody increase your focus. Ready for this? So that little bottom right there, Emily, where it comes down and it hits 600 and then bounces back up. Mm-hmm. And it comes down to 600 and bounces back up. What do we call that little $600 zone when it bounces back up?
We call that support.
We call that support. And you probably know this because I've trained you already. What do you do when a stock breaks support?
Well, when a stock breaks support, that means it's reversing the trend. So it's starting to come back down. So it's breaking down. It's broken support.
Breaking support. Now this rhymes. You ready for it? Mm-hmm. When it breaks support, you sell short.
Yeah.
Okay. So repeat after me. Break support.
When you break support, you
sell short. Because when it breaks that support zone, it's going to either start hitting the stop losses from the bullish people. It's also going to get the bears' attention. They're going to see it breaking support. Their little Pavlovian responses kick off, ding, and they know it's time to sell, because what do you do when it breaks support? You sell short. And you'll probably, not a guarantee, you might see the stock price start to drop. And if it can drop from 600 down to this previous low ballpark near 400, you got about 200 points of potential price action in there. And again, not a guarantee. In exchange for, if you were to say put a stop loss out above the candle, you could take a little bit of risk right there in exchange for a whole lot of reward. And I should probably do 200 points in green so it makes you feel better. Where you could sell high, sell at 600. And then maybe if everything pans out and the fear grips the market like I think it might, and these kinds of restaurants are all, they're shutting down, they're laying off workers, they're trying to offer food on carry out only. I know a lot of people are a little nervous about eating out right now. They don't necessarily want to run the extra risk. So you got a trigger stop loss reward scenario there, but that's the kind of pattern that can help you, again, make some money. Now, some of these ideas are a little redundant. Some of them are, a little unique. How about like Hyatt hotels? You're already starting to see this one sell off again. So it had the same general pattern, big selling. Boom, the bottom comes in, rallies, the candles start to shrink. You got a doji, you got kind of an evening star doji, gravestone doji. So you have a handful of sell signals, 20 period moving average. There's probably an old support zone in here somewhere if I look back far enough. Well, I don't see one close enough. There's one a little higher, but not too far off. Starting to go down again, and look at that same volume picture. Tons of participation during the selling phase, and as prices ran back up, the participation just died off. The number of transactions died off. It ran out of gas. So that's another good bear retracement. Now this one's only $40 and it's got $40 down to $20. Now I'm not great at math, Emily. I'm good at seeing pictures on charts. Even I can do the math. 40 to 20.
I think
that's
we can all figure that out.
That's half, right?
Yep.
And if you could borrow the stock at 40 and you got a little bit lucky and it dropped all the way down maybe to 24, down a little bit lower to 20, which would be a reasonable profit target, the ROI on that would be pretty impressive.
It sure
would. Guaranteed, not a guarantee. Void where prohibited, not valid in all states. Hyatt hotels, who knows? Maybe they rally. But I have no plans to stay in any hotels at the current moment. I know that they're putting a lot of employees on furlough. They're looking for government bailouts. And there's a lot of people concerned that these kind of service sectors are going to really struggle. And again, at some point in time, they'll come back and it'll be a good business, investment to buy, some of those companies that survive this and do well. But in the meantime, when I see that kind of sell signal, I see it come up to that falling 20-period moving average, give me a couple of candles of selling signals, and then it gives me a confirmation breakdown. And I can see, a range between, you could sell at 42, 43 in this ballpark and see it drop down to 20, 24. In that ballpark, that's a big opportunity in there. That's pretty good looking and hard to ignore. And again, if you're new to this stuff and you want to learn exactly how to do that, we've got the 7-step guide for you to get started. We've got the scouting reports for you, it's Tech 101, the options 101. You could learn to buy put options on that and potentially make money, or you could do something a little bit more sophisticated like a put debit spread, which really allows you to control risk, take advantage of the bearish market. Yep. Now, another one that's not too bad looking, Emily, try not to get excited when you see this one. Mickey D's. Now I'm loving it when I see this chart. And, I'm seeing a lot of commercials out there like, we'll deliver it to you. Please take our food. They'll do deliver through like Grubhub and DoorDash. You can obviously go through the drive-through and people are still going to eat out, but same point in time, a lot less. And so they've already taken an initial hit. Stock price dropped really, really, really hard. The volume sold off really, really, really big. The price has rallied up. You see it slow down. The candles shrink. You see that exact same pattern. The volume tapering off as not the number of people buying that and driving the prices back up is dropping. In the last couple of days, you've had below average volume. It hit that 20-period moving average, which is, I know, gets Coach Mark excited every time he sees stocks trading at those moving averages. That's going to get him excited about looking at the opportunity. It just broke 160 support, a couple candle lows. It closed below the 9-period moving average. And what do we do when it breaks support?
We sell
short. And I'll show you something here. This stock is easy to borrow. It's not hard to borrow. It's easy to borrow. And if you wanted to borrow some shares and sell it here at the 156, 155 zone, and maybe in a day or two, maybe a week or so, be able to buy those shares back at 140 or maybe down at 130 or even as low as 125 down here. It's the old support, or possibly lower. You could sell high and then buy low, or of course, if you know the tackle trading playbook, you could learn how to buy the long put option on that. You could learn how to do the put debit spread. I've actually done put debit spreads on this chart. I've already pulled the trigger on it, and I actually have put debit spreads in my account. And I'm anticipating another drop out of McDonald's. Now, at a certain point in time, McDonald's is the kind of company you buy. This is one that the investors will come back to when the bottom comes in. Based off of this pattern, I think we've got another leg down. And if you like McDonald's at $150, well, you're going to love the idea of maybe trying to pick it up down here at 100, in a month or two when it's trading even cheaper. And the investors will come in and gobble up McDonald's and they'll buy it. So the opportunity, the downside is limited. And again, it's that same concept. If you can take a calculated risk where you could put in an entry price where you learn to sell here, you sell, you put in a stop loss to protect you to buy in case it goes back up. And then you put your target down here to buy, and you get that same, risk 1 unit to make 2 or more units down here. And, the risk to reward ratio is really, really attractive. And again, sometimes you take the risk. Sometimes you take that calculated risk and you end up with an expense trade. But if you learn to do it the right way, you put in the right position sizing, risk tolerance, you use the right kind of stop losses or protective, risk management, you can take advantage of the potential reward there. And I love this kind of market. I hate to admit this, Emily, but I'm kind of excited about this bear market. Because this is not my first bear market. This is my third bear market. I started trading back in the late 90s, early 2000s. And I really cut my teeth during the first bear market I experienced back in 2001. Mm-hmm. And then 2008 was a fascinating experience, the market. And again, it'll bottom out and it'll pass and the market will eventually go back up. But in the meantime, the average bear market lasts 18 months. And we're into this, 2
months, if that.
And it's possible we get a quick recovery and they find a cure for the COVID virus and everything gets back to normal quickly. But I think we probably have a long battle ahead of us. And that bearish opportunity, again, gets me excited. Now, for whatever reason.
Before you switch charts on that note, real quick, because you brought up a very important point, but when you said that at some point investors will come back to McDonald's and buy, once we find a bottom, and you talked about, with the investor mindset to make sure that you're, looking at value investing companies that have good fundamentals. What would be the difference between somebody who would want to look at McDonald's to get into it as an investor long-term eventually versus a retail company, maybe like, a Macy's?
Well, okay. Macy's, for example, the retailer, where my mom likes to shop, I think they're not doing well. They've been struggling for a while now. And now that the retail sector, you're seeing them close down, shops, and they've all got big leases in expensive malls and, no foot traffic. I mean, they can sell stuff online, but I think the new and upcoming generation prefers, shopping where somebody picks their clothes out for them, like those Stitch Fixes and those, whatever. They dress you more stylishly than you can dress yourself. Mm-hmm. And they ship it to you in a box and you can just try it on and send it back. Or, trudging out, going to the retail shop and, the same old department store that your grandparents used to shop at. And I might be framing that intentionally to kind of, paint that picture, but it's true. They're in trouble. I would pick up a McDonald's as a value investment because people are going to go to McDonald's.
Right.
But are they going to keep shopping at a Macy's? Is Macy's going to survive this storm? Probably not as well as McDonald's will. Yep. So at a certain point in time, McDonald's is going to be a steal. And if you like it at 158, well, you're going to love it at 100. And I think the potential for it to go down there, McDonald's pays a dividend. But if you can get your cost base down here where you could pick it up at a lower price, 120 or 100, that dividend gets much more attractive if you have a lower cost base. And, there's ways for people to buy and cost average. And a lot of investors think that way, which is good. And again, for the investor class mindset out there, there is an opportunity to buy. I just don't think we're there yet. And there's been some people who've already called the bottom and said, that's it. That's the bottom. We're there. It's already been priced in. And I'm thinking to myself, well, the government's still planning 3 or 4 more bailout packages that they're already talking about it. Like they know that what they initially did is not going to be enough. And I think that we've got, again, some acute pain in front of us ahead of the market. And I just see a little bit more downside, especially as people are being, in isolation, we're calling it, right? We kind of rebranded the word quarantine and we call it social distancing now.
Yeah, social distancing. Yep.
So not to pick on the fast food industry too bad, but I see another chart in Wendy's. And I like Wendy's. I'm not going to lie. They're delicious. I'd risk the coronavirus for a free Frosty that they're offering right now. But they're giving away free Frosties because they need you to come. And the big difference between Wendy's versus McDonald's is not just that the Dave's Double is better than the Quarter Pounder. And they're both good. We could argue about that.
I wish I knew that before Maryland put a mandatory lockdown. I could have gone and got my free Frosty.
No doubt. Okay. I was just going to get my Frosty, officer, I promise. But if you look at this is only $15 stock, $13 stock. It just hit a low of $6. And again, I'm not that great at math, but like half of 13, 14 is 6, 7, right? Mm-hmm. And it got all the way down to 6. It rallied back up. The candlesticks are shrinking. You got a doji, a double top, a potential pinch between the 9 to 12 or the 20 and the 9 period moving average, which Coach Mark will tell you about. He swears by it. He loves it. There's, a good chance it breaks down. If it starts to break and trigger, you could trigger probably, 1330, maybe a little lower at 1250. And I think the drop potential here is 10, maybe 7, maybe that low 6. And it's got that same volume pattern. Big volume on the sell-off. And then as the prices rallied back up and it runs out of gas, bear retracement pattern, that volume tapers off. And those are they're good looking patterns. And when I see them, I get excited. And I do admit, Blake, that the spicy chicken sandwich from Wendy's is delicious. Imagine how many spicy chicken sandwiches you can buy if you borrow Wendy's stock and sell it at 13 and you're able to buy it back down here at 7 or 6. You could make a quick 5 points. I mean, easily you could. I think there's a potential here for 5 or 6 points. We'll call it 6 points. Again, that's assuming it drops and the fear grips the market. We see some more selling, which I think there's a good chance we will. And you risk 1 point to 1 or 2 points tops. 1 to 2 points in exchange for 6 points. So if you just, to put that into perspective, you just did 100 shares, times 6 points, well, that's $600. Well, $600, that buys a lot of crispy chicken. You supersize your value meal. You can get the large fry and the large drink if you got $600 burning a hole in your pocket because you learned how to sell short. You learned how to buy puts. You learned how to do a put debit spread, or maybe one of those fancy spread trades that Gino does that you learn about in the lounge. Good stuff, right? So, and again, those are just some of and those all came off of the sell the rip watch list we were just looking at. Every one of these candidates I've been showing you tonight, it came from our scouting reports. And again, you had the stock report here. Whoops. I just opened up the wrong window. Let me open up a different one here. Don't need that one. Try that one more time. There we go. Stock report. And again, there you see them down there. You got a pretty good list. You got McDonald's, you had, and a lot of the trades this week already ripped down, like, Penn Financial, or no, sorry, not Penn, but Penn Gaming, International Gaming, Wynn Resorts. They're already dropping like rocks. There's Wendy's, there's Starbucks. I mean, Starbucks is taking a hit too. People are brewing coffee at home. It's the weirdest thing in the world, Emily. I have this machine in my kitchen that makes coffee for cheaper.
Oh man!
And I'm not allowed to leave my house, and so I'm officially off the Starbucks. Like I no longer need that fix.
Coffee machines do exist. They're not extinct, right?
They're not extinct. They're not extinct, and I don't have to risk getting the coronavirus to go out to the Starbucks. And there's just a lot of really good ideas in there in that sell the rip watch list. And then the option report that Tim put out this week, not only talks about the sell the rips, but it also gets in and it talks about how to play that strategy, how to play that downside. And again, we get those reports out every week. And by the way, if you're a Tackle member, give us a shout out. How awesome are those scouting reports on it? Getting that education, getting that information every week, getting those watch lists. If you love the scouting reports, hashtag Team Tackle in the chat. That would be awesome. Again, similar list. We had some variations on the list between the options report and the stock report, but really good information on that little video, every week. And I can play it for a minute here just to kind of show you
100% for certain what is going to happen.
Wouldn't you love to have Tim
All
Justice
we can
walking
do is
you
focus
through
on price action,
bear retracement
build an
setups with
investment
that
thesis
sexy
that
radio
makes
DJ
sense.
voice he has every
And
week?
today in this option report, I kind of want to talk about some of the tools in
There
the
you go.
options market that
So
can
there you go. I also wanted to highlight and point out the tackle trading playbook. For those of you who are brand new and you're learning this stuff, you can get your scouting reports, you can get your options 101, your technical analysis 101 beginner classes. But then we also have like the trading playbook, which we have. How many strategies do we even have in here? I don't even remember. We got 30 strategies or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I can't count that high. There's a lot of strategies in there, and all the way down to like volatility strategies and really fun strategies that we can do. in any market conditions, bullish, bearish, neutral, this volatile market, there's opportunities. But if I were, people who are interested in trading this market safely, I would really point to things like the bear put spread as a really great way to trade the market. You can get in when you got a good bearish, bias. Put spreads are a really awesome way to control your risk. Get in, learn the strategy, attend the classes, we got our coaches show daily on YouTube, but we also have the Traders Lounge every day. And then we have our, coaches show. We have our mastermind groups that we're doing 3 or 4 shows a week in the evenings. And I happen to know most of you are at home and have the time to put into your education at this point in time. And so, before we, go on anymore, and I can sit and answer questions or, interact with everybody who showed up tonight, which is awesome. We had a lot of people show up here tonight, by the way. Over 100 folks are watching us live right now, which is fantastic. Take advantage of that free trial. Now, I'm going to copy this URL address, Emily. And I don't know if I can get it into that chat. I'm going to share it with you so you can throw it into because I've got that on my other computer and they're not connected. So let me share that with you there. Oh, hey, there you. That's Emily.
That's me. Who's that?
Yeah. So let's see if I can throw that there. Chat, Emily. Throw that one into the old YouTube chat there. There you go. Handsome Jake. We got Jake. And again, 15-day free trial, no obligation. But you can get in, you can gain unfettered access to all of our pro content for 15 days. The regular price is $97 a month. And, that's a value at twice the price. It's just an awesome community to be a part of. And again, you get access to all of our content, all of our rookie, varsity, and pro content. You get the scouting reports. You get to attend our live traders lounges every day. During live market action, you get to attend all our coaches show, cash flow clubs, mind of a trader. You have access to all of the tackle 101 trainings, the options 101, again, beginners for technical analysis 101, 7-step guide. So if you're brand new and you're looking for answers, we've got them. And again, awesome opportunity to get in there and plug into and, learn, open up that playbook. You guys have fun tonight?
I did.
I know I did. Spread the word. And again, I know we've got a ton of Team Tackle here, already pro members. Again, nothing would mean more to me right now than getting your, what do we call that? Recommendation for tackle trading. But also, don't forget, guys, there's a lot of people in your lives that also need help with this. In fact, I've been thinking about this a lot, Emily. People are scared right now. And I think about what we do here at Tackle Trading. We were built for this. We were built for this market. Like right now, the opportunities, again, where most people are feeling fearful. I know a lot of our tackle trading community is really more worried about the greedy part of it.
Yep,
they're not panicked. They're not scared. And if you are panicked and scared, that's okay. There's still things you can do to protect your assets. There's still things you can do because the market's only down, 30% at the moment, 25, 30%. I think we may see more down. And again, there's going to be opportunities for you to protect your principal, to protect your capital, protect that retirement, but also to be prepared for that bottom of the market when it comes, to be able to take advantage. How many of you wish you had a time machine? You could go back to 2009 and buy anything. Buy Apple, buy McDonald's, buy Coca-Cola, buy Verizon. Well, that opportunity, I think, is just right around the corner. Whether, again, it's a month from now, 2 months from now, 6 months from now, a year from now, doesn't matter. We don't have to predict the bottom, but we'll be talking about that, and we'll be spotting the signs and reading the data, and we'll know when we're going to have a better opportunity to do the value investing. And then I think the opportunity on the bearish side right now is, if you'll pardon the use of the term, sick. As the kids say, it's a once in a lifetime type of opportunity, and you want to take advantage of that. So, and I'd be happy to sit here for a minute and answer questions. Anybody who has questions about what we do at Tackle, how we can help you, what we offer, what you get in the free trial, feel free to pop those into the chat.
No, and while you're waiting for questions to come in, Noah, and once again, great job on your.
Oh, hey, Mark, how you doing? I didn't even know you were here.
Well, it's I'm stealthy like that.
Yeah,
I'm stealthy. I just like to remind all pro members that we are going to do a Tackle 25 mastermind group tonight, where we're going to focus on what do fundamentals mean, how to manage covered calls in this environment, and obviously take any questions. It's specifically going to be focused on long-term investing holdings and how to manage that covered call trade on those that you may or may not have. It's been a difficult environment with whipsaws, properly managing that. We're going to try to give some tips on that. And if you are not a pro member and would like to attend in the next 30 minutes, you can just email me at team@Tackle Trading, and I'll get you set up with a free trial membership and get you a link to that class that we're going to do tonight in 30 minutes at 8:30 Eastern time.
That'll be fun. I definitely think you should
I'll
all
be
be.
there.
I'm sure a good percentage of the folks here will be there in just a moment. And can you please talk about premium packages in the website? Yeah, Frank, so inside the Pro, you have unfettered access to all of our core content. So you get the reports, scouting reports. You get, you get enrolled in all of our concepts there. And then on the courses, you have the 7-step guide, which is free to everybody. And then we have the stuff that all pro members get: our technical analysis 101, options 101, futures 101, Forex 101, and system development 101. These are all included, and they're really good, strong foundational courses for folks who are new, that are learning, that want to gain more information. If you didn't understand some of the stuff we talked about tonight, that means you need to be getting in there and taking these classes and getting yourself educated while you can. The premium stuff we have awesome. Now these we sell a la carte, and you can go to gain access to the Tackle 25, which is a cash flow system where we focus on covered calls. Tells me my internet connection's unstable. So I think everybody's getting that signal from now on. From bandwidth is a question, isn't it? Mm-hmm. Tackle 25, which is all about cash flow strategies, really good long-term investment strategies. It's an awesome, just really solid bit of information on learning how to cash flow using options like covered calls and buying good quality stocks that pay dividends. We put together a top 25 list every year, and they've done extremely well. Then we've got our STEP system, which is a premium swing trading system. It also can be used as a day trading system. And the STEP system stands for stop loss target, entry, and position size. And it's a system and rules, and it teaches you things like the bear retracement pattern, the bull retracement pattern, the bear breakdown pattern. It teaches you all of the trade setups, and then how to go in and how to position size, how to put in the trigger prices, what orders to use, where to place your stop loss. And we sell that one a la carte right now. We're going to be putting together some promotions on these, by the way. We've been talking about, and I don't know what our offer is going to be, but we think that people need this stuff right now. They need it. They're hungry for it. We can help them. So we're going to be offering some deep discounts on this stuff, and helping folks out. And then we've got our cash flow condor system, which is a cash flow system, which is ideal in most market conditions, not the current market condition. Well, some people would actually argue that. There's probably some folks out there doing condors, but it's a really great cash flow system that one trade a month, you manage it, you follow the rules, you follow the system, you learn how to protect it. And it's the type of thing that can give you really high % yields in very short periods of time, like a month or two at a time. And then we've got our bear market survival guide, which if ever there was a time to have that bear market survival guide, you get in there. And all this stuff is available. You go click on the store, and you go to the store, and it's got all of our content, those premium packages and the current offer and the price on there. And again, if you're interested in any one of these, like email Mark, team@Tackle Trading, and he'll help you get set up. And we do have something that we're cooking up soon. We're not there yet, but we're working on some coaching programs for y'all, little one-on-one coaching and group coaching to just augment your education and get what you're doing now. So we're planning on how to get everybody on this team through this, not only through the crisis, not only survive the crisis, but learn how to thrive in it. And I think the opportunities right now in the market are they're unparalleled. Like I get that people out there are really scared and worried and nervous, but at the same point in time, the opportunities are just unreal.
Absolutely. I think the most important thing is for people to get educated and prepare and plan. And when the time comes, if you're going to be an investor, there will be, your time will come. And if you're looking to learn how to trade, then, start learning all these different patterns that we're teaching right now.
Oh yeah. Plus we have the clubhouse. Everybody can gain access to the tackle trading clubhouse where we're always talking shop and talking about what we're doing, what we're looking at. It's where we post a lot of updates and news and information. And I love the community because, man, when you can, pop in and read one of Tyler's blogs, or you can get in there and help each other answer questions. Like it's awesome to see like-minded people in there, working on this stuff and just sharing and helping each other. And it's so valuable when you learn this stuff. So it's education, financial education, trading education, investing education makes all the difference in the world. And when you know what to do, you're going to be better prepared and have a better idea of what to do and when to do it. And, the opportunity is there for all of us. Yep. Perfect. And again, some of you got education, some of you are looking for more. And again, I know all of you know people who need help with this market. So don't be shy, reach out to people and say, I'm a member of this tackle trading community. Come check it out. 15-day free trial. You can learn some of the stuff I'm doing. And, oh yeah, so we're good. Well, I think dinner's ready. Yeah, it smells ready. So I'm going to go ahead and sign off here. Anything else? Are you still there, Mark? Anything else you want to say before we close it down tonight?
No, I'll see a lot of you in 25 minutes. And once again, if you are not a pro member and would like to join tonight, just send me a message. All
right. Okay. #Team Tackle. Love you guys. We'll see you all there.
Bye.